The pre-reset cities had elaborate bronze drinking fountains, not charity fixtures, but precision-engineered hydraulic infrastructure built to a quality that suggests universal use, not poverty relief. Then, between 1840 and 1890, city after city dismantled them and connected the population to metered water systems that charged for access. The fountains didn't fall into disrepair. They were deliberately disconnected, and the timeline of that disconnection runs exactly parallel to the installation of central banking across the same nations. I want to begin with a question about price. Not the price of a specific commodity, the concept of price itself. The mechanism by which a thing is assigned a numerical value in a unit of currency and exchanged for other things assigned numerical values in the same unit. This mechanism is so fundamental to how we organize our material lives that it is nearly impossible to imagine economic activity without it. Nearly impossible to conceive of a civilization that ran its material exchange on a different principle. Nearly impossible, but the evidence suggests we should try. Because the pre-reset cities, the cities whose architectural vocabulary and construction sophistication we have been examining throughout this investigation, contained a specific category of infrastructure that the post-reset cities systematically removed. Free public infrastructure, not subsidized public infrastructure, not publicly managed infrastructure that charged below market prices, but genuinely free, cost at point of use, zero. Infrastructure provided to urban populations as a basic feature of the built environment rather than as a commercial service. The drinking fountains are the most visible example, and I want to spend some time with them because the pattern of their installation and removal is, once you trace it carefully, one of the clearest records of the transition between two economic systems that the physical record of the 19th century contains. The great pre-reset cities, the cities whose architectural vocabulary we associate with what was being inherited and occupied in the mid-19th century, featured elaborate public fountain installations. Not decorative fountains, though many were also decorative. Functional water distribution points positioned throughout the city at intervals designed to ensure universal access, built to a standard of quality. Stone, bronze, elaborate hydraulic engineering that is entirely inconsistent with their stated purpose as charitable provision for the poor. Charitable provision for the poor doesn't get bronze fittings. Charitable provision for the poor doesn't get hydraulic engineering of the sophistication that the surviving pre-reset fountains display. The quality of these installations is the quality of infrastructure designed for universal use by the general population, not of facilities designed for the marginal use of those too poor to access the commercial alternative. The fountains were not the commercial alternative's poor substitute. They appear, from the physical evidence, to have been the primary water distribution system, the system that everyone used, regardless of status. The commercial alternative, the private wells, the water carriers, the eventually privatized water supply systems of the industrial era, were the secondary system, the novelty, the thing that appeared alongside and then replaced what had previously been universal and free. The removal of the public fountains follows the same timeline as the installation of the private water supply systems. The decades between approximately 1840 and 1890 C, across North American and European cities, the progressive privatization of water supply. The municipal water systems that replaced the fountains charged for access. They charged through taxation, or through metered rates, or through the cost of plumbing connections to private buildings. The universal free water that the pre-reset fountain networks had provided became, in this transition, a product, something with a price, something that required payment to access. And the fountains themselves, those elaborate bronze and stone installations that had been the visible infrastructure of the free system, were in many cases physically removed, or were allowed to fall into disrepair, and were eventually demolished, or were reclassified as decorative features and disconnected from the live water supply that had made them functional. The Croton Distributing Reservoir in New York, built in 1842 in an elaborate Egyptian revival style, demolished in 1900. The elaborate fountain networks of pre-Haussmann Paris, largely dismantled in the great urban renewal of the 1850s and 1860s. The public bath and fountain complexes of pre-industrial European cities, whose function is attested in numerous contemporary accounts, but whose physical remains are, in most cases, gone. Gone, replaced by private water systems that required payment. The transition from free public water to paid private water is documented, official, uncontroversial. What is less discussed is what it represents in terms of economic philosophy. The civilization that built the elaborate free fountain networks, that invested the quality of craftsmanship and the sophistication of hydraulic engineering that the surviving examples display, in infrastructure that everyone could use for nothing, was operating on a fundamentally different economic principle than the civilization that replaced them with metered water supplies. It wasn't just water. The pattern repeats across multiple categories of basic infrastructure. Public baths, whose elaborate pre-reset examples survive in various European cities as architectural monuments to what was once apparently a common public facility rather than a luxury amenity. Public heating systems, whose evidence is suggested by the elaborate basement infrastructure of certain pre-reset buildings whose underground systems have no clear function in the official narrative of 19th century technology. Public lighting, whose pre-reset form is a subject of ongoing investigation in this research area, with evidence suggesting that the street lighting of certain pre-reset cities did not function on the gas or oil combustion model that the official history of urban lighting describes. If these basic infrastructure categories, water, bathing, heating, light, were universally provided at no direct cost to urban populations in the pre-reset cities, then the economic system that supported that provision was not the market system that we understand. It was not the system of price and exchange and debt-financed infrastructure that the post-reset world installed. It was something else. Something that the new system could not operate, could not maintain, and therefore had to replace with a system it did understand. A system based on scarcity, on the charging of prices for access to basic goods, on the accumulation of debt by those who needed access and could not pay outright. The central banking system, the Bank of England in 1694, the various European central banks of the 18th and 19th centuries, the Federal Reserve in 1913, is the institutional infrastructure of the debt economy. It is the mechanism by which a system that runs on borrowed money at interest is organized and regulated and perpetuated. And its installation, the installation of central banking in country after country during the period of the reset, corresponds with the dismantling of the free infrastructure of the pre-reset cities. Not coincidentally, as cause and effect, the free infrastructure had to go because the new economy required that its elements be priced and sold. Water had to become a product. Heat had to become a product. Light had to become a product. Access to the basic conditions of civilized urban life had to become a purchase. And the institution that managed the debt required to fund the new infrastructure the infrastructure of priced and sold basic goods, was the central bank. I want to be specific about what the evidence points toward in terms of what the pre-reset economic system was running on. The physical infrastructure, the free fountains, the public baths, the elaborate municipal systems of the pre-reset cities required an energy source to operate, not a commercial energy source. Not a source mediated by price and scarcity, the hydraulics of the fountain networks, the heating suggested by the pre-reset building infrastructure, the lighting whose pre-electrical nature is suggested by accounts that predate any technology the official history of urban lighting provides for. All of these required energy input. And the physical evidence of how that energy was generated, or harvested, or accessed is present in certain surviving structures, in forms that the official technological history of the 19th century cannot account for. The energy towers, which I have discussed in previous investigations, are part of this picture. The unexplained subsurface systems of several pre-reset cities whose plumbing and conduit infrastructure exceeds any function the official record assigns to them are part of this picture. The specific materials used in the construction of pre-reset fountains and water distribution infrastructure. Materials whose properties include characteristics that the official history of those materials doesn't fully account for are part of this picture. The picture is not yet complete, but its shape is becoming clear. The pre-reset civilization ran on an energy system that didn't require combustion, didn't require scarcity, didn't require a price mechanism to allocate. And the economic system that organized access to that energy was therefore not a market system in the sense we understand. It was something else. Something that disappeared along with the energy system that made it possible, replaced by an economy of scarcity and debt that serves the interests of the institutions, the central banks, that administer the debt. The central bank doesn't create value. It creates obligation. It creates the condition in which you must earn money before you can buy water, before you can buy heat, before you can buy light. The condition in which basic human needs are commodities rather than common goods. That condition was installed in the 19th century alongside the demolition of the free infrastructure and the privatization of the basic goods it had provided. And the institution that administers and perpetuates that condition is the central bank, with its interest rates and its debt instruments and its management of the money supply that determines how much of the common good any individual is permitted to access. A system so total, so thoroughly installed in the infrastructure of modern life, that it is now nearly impossible to imagine what ran before it. Nearly impossible. But the fountains, where they survive, still remember what they were for. Their bronze fittings and their elaborate hydraulics were not built to serve the poor. They were built to serve everyone and everything. Free. That is what had to be replaced. If the pre-reset civilization provided water, heat, and light at no point of use cost, and the central banking system was installed at the precise moment that infrastructure was being dismantled, what economic principle was being replaced, and who benefited from replacing it with debt? Tell us what you think in the comments, and share this if you believe the history of money is the history of what was taken.